But as we get closer, those probabilities for what's going to happen in September will be more and more locked in. And then when the event happens, if it's what they expected, I wouldn't expect particularly explosive asset price changes that week or that day. But if something deviates significantly from what they expected, we could see, if they cut more than expected, we'd probably see a bigger jump in gold, potentially Bitcoin, than what was priced in. I'm structurally bullish on gold and Bitcoin. And then when it comes to equities, it really depends on what sector, what jurisdiction of equities, what valuation. And so I think now Bitcoin is in that bucket of probably, harder assets you want to hold if you expect ongoing currency debasement.
As the cryptocurrency market anticipates potential interest rate cuts by the Federal Reserve, analysts caution that Bitcoin may experience a short-term decline, challenging the widely held belief that rate cuts always benefit risk assets. A Bitfinex report from September 2nd noted that Bitcoin prices have surged by up to 32% since their August 5th lows, with global open interest in BTC stablecoin perpetual pairs rising nearly 30%. However, Bitcoin's price growth has slowed, now up approximately 177% from its recent low, with the current price around $54,900. In an interview with Kitco News, an analyst predicted that Bitcoin could reach $100,000 within 18 to 24 months, fueled by strong liquidity trends and its potential as a store of value. She criticized central banks for manipulating economic cycles by raising rates in strong economies and lowering them during downturns, which in turn drives asset price fluctuations. While optimistic about gold and Bitcoin, she expressed mixed feelings about stocks, stressing the importance of focusing on inflationary assets like Bitcoin, citing its limited supply and global liquidity as key drivers of its performance over the next 12 to 18 months.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
One of the things I did in the book Broken Money was I was very critical of central banking in general. So they when the economy is going strong, they start to raise interest rates until they kind of pressure it. And then when it starts to blow up, they cut interest rates and they try to reinflate the next credit cycle. So they're kind of, in theory, supposed to be a counter-cyclical force, but in practice, they end up being a lagging pro-cyclical force. They contribute to booms happening, and then they're unsustainable. And then they contribute to popping the booms that they themselves caused. And then they try to reflate the bust that came from the boom that they broke, right? So it's just kind of this repeated cycle of putting out fires that they themselves at least partially started. I'm fully critical in that sense. And as far as how assets should react, I mean, basically they tend to react in a delta to what happened versus what is expected. So if the market is but as we get closer, those probabilities for what's going to happen in September will be more and more locked in. And then when the event happens, if it's what they expected, I wouldn't expect particularly explosive asset price changes that week or that day. But if something deviates significantly from what they expected, we could see, if they cut more than expected, we'd probably see a bigger jump in gold, potentially Bitcoin, than what was priced in. So I don't specialize in these kind of multi-week or multi-month trading ranges. Right. I'm structurally bullish on gold and Bitcoin. And then when it comes to equities, it really depends on what sector, what jurisdiction of equities, what valuation. So there's some types of equities I'm quite bearish on. There's some types of equities I'm quite bullish on. And I think we're probably going to see rotations in the quarters ahead. But I wouldn't read too much into any one rate cut period. I basically argue that it's useful to not have a 60-40 portfolio and to instead have at least some gearing in the portfolio toward those inflationary assets.
And of course, you group Bitcoin in that category.
Yeah, I think it's we don't have obviously the long-term track record of those other decades like we do with gold or with energy, but it fulfills a similar purpose, which is that it's money with a finite supply. There's some disadvantages relative to gold that it's got a shorter track record. It's a different type of money, but it's got some advantages, which is that it's globally portable, much easier than gold. It's got a lower supply inflation rate than gold, and I would say it's still below its total addressable market. So it's still held by very kind of a small percentage of people in any meaningful capacity. And so I think now Bitcoin is in that bucket of probably, harder assets you want to hold if you expect ongoing currency debasement. If you expect positive real rates for foreseeable future and you expect good equity growth, then that's kind of a case to just, you can own equities. You can own, those types of assets. But if you do expect long-term currency debasement and kind of, risks from all this kind of policy materializing, that's where assets like gold and Bitcoin and things like energy producers can come in really handy for a portfolio. So generally speaking, in the next 12 to 18 months, I'm fairly bullish on it. Generally speaking, the biggest correlation I found to Bitcoin price is global liquidity. And there's multiple ways to measure global liquidity. The one I tend to use is global broad money supply denominated in dollars. And so there's both a credit creation component and a dollar index component to that liquidity measurement, which is relevant because of how much dollar-denominated debt exists in the world. When that's doing well over a given 6-month period, normally Bitcoin's doing well over a given 6-month period or 12-month period. When that's doing poorly, usually Bitcoin's not doing great either. That can't really tell you what's going to happen on a given week or even a given quarter, but over a 12-month period, if you have a high conviction on the direction of global liquidity, generally speaking, Bitcoin is a good way to express that.
Lyn Alden predicts that strong liquidity trends could drive Bitcoin to reach $100,000 within the next 2 years. Even if this target is not met, she believes Bitcoin will continue to perform well. However, she cautions that a major geopolitical crisis, such as a war or a sharp rise in the dollar index, could affect global liquidity and drive Bitcoin's price lower. According to Alden, a strong dollar represents a negative liquidity event, which would negatively impact Bitcoin and other volatile assets. She doesn't currently view Bitcoin as a safe haven asset, but acknowledges its potential as a store of value due to its portability and self-custody features. Lyn Alden considers Bitcoin a liquidity-driven asset, with its price closely tied to liquidity patterns. Let's return to the interview to explore more insights from Lyn Alden.
So I don't really consider that this cycle has hit any of the extremes of prior cycles. And so the combination of being pretty positive on liquidity for call it the next 18 months and not really seeing too much excesses in the Bitcoin space currently, my base case is bullish on Bitcoin over the next 18 months.
How bullish?
I mean, I'd be surprised if we don't hit 6 figures in this cycle. Whether it's 18 months, if I give myself some extra room and say 24 months, I'd be surprised if we don't hit 6 figures. We could go way north of that. Like we could, I wouldn't find it inconceivable to go well into the 6 figures, but I try to have conservative estimates. And I would say that generally speaking, if we're having a conversation 2 years from now and we've still not seen 100K, despite having a positive liquidity cycle, I'd be surprised. If something happens to impair the liquidity cycle, like let's say some war breaks out and the dollar index spikes to 110, or if you get an event like that, kind of like how in 2019 anyone predicting that what was going to happen next year would have been blindsided by COVID. So if you get something like that prevents global liquidity from going up like I expect it to, that would not surprise me to see Bitcoin have a rough time. But I would be surprised not to see Bitcoin notably north of here if we do have another 18 months of rising liquidity.
You're saying that a potentially big geopolitical event may impact, well, not so much global liquidity, but dollar strength.
Well, dollar strength is pretty much by definition a really bad liquidity event because there's so much dollar-denominated debt. And so what that represents is basically the unit of account of liabilities increasing sharply, right? So that's almost by definition a negative liquidity event, especially the way that I define it, which is global broad money supply denominated in dollars. So whether you look at it practically or however you define that metric, a very sharp and strong upward move in the dollar is generally bad for liquidity. Even gold might not do very well in that environment, but gold would probably hold up better than Bitcoin. Bitcoin and most fairly volatile assets would probably suffer in that kind of dollar spike. That could be war related. That could be a big credit event in some pocket that no one's really looking at the moment. Usually these things emerge from not whatever people are focusing on. Mm-hmm. So that's kind of if I would imagine how I'm wrong. Like if I picture, okay, my base case is Bitcoin going to see 100K. If I think, okay, what are the things that happened if I'm wrong? Well, one is that basically we did not get that liquidity as expected. We got a big dollar spike, or we got some sort of geopolitical event related to energy or related to war or something, or some sort of big crackdown on Bitcoin, something like that would be reasons why Bitcoin doesn't hit 100K. Is basically that my base case ends up being incorrect. So I don't define it as a safe haven asset per se because most people don't understand how it works. Most people can't tell you what the halving is. Most people can't tell you how the 21 million code is enforced. Most people can't tell you what the block size limit is or what the block time is. It's not a very well understood asset yet, despite the fact that it's 15 years in. Now, the aspects where it's a safe haven asset is that if you self-custody Bitcoin, regardless of what its price is doing, if price could go up or down by 20, 30%, fairly short, but you have global capital that you can bring with you anywhere. But you could memorize 12 words, right, representing your private key, and you could bring your money and almost anywhere in the world where you can eventually reconstruct it with any sort of internet access at all. So that's the safe haven element to it. But because it's still an emerging one, it's still an emerging store of value. It's more volatile than something that's already reached its total addressable market because it's kind of priced like an option. It's priced on the probability that it's going to reach somewhere closer to its total addressable market, which I think is well north of here. And so because it's priced like an option, it has that issue. So I would describe it as it's mostly a liquidity correlate. And so if there's a risk-off event or some sort of crisis event, it depends on whether that crisis is pro-liquidity or negative liquidity.
A new report projects that U.S. businesses will invest $10.3 billion in Bitcoin over the next 18 months, as they increasingly see it as a hedge against inflation and a store of value. The research points out the limitations of traditional corporate treasury strategies, which rely on cash and short-term investments that often produce low returns and fail to keep up with inflation, leading to a loss of value. For example, Apple has lost $15 billion in treasury holdings over the past decade due to inflationary erosion. In contrast, MicroStrategy CEO Michael Saylor has adopted a Bitcoin-centered corporate treasury approach, dedicating a significant portion of the company's funds to Bitcoin. Saylor argues that Bitcoin's scarcity and absence of counterparty risk make it a powerful store of value, offering what he calls economic immortality. Since implementing this strategy, MicroStrategy's stock has soared by more than 1,000%, greatly outperforming Berkshire Hathaway's 14.75% gain during the same period. Meanwhile, Berkshire CEO Warren Buffett has declined to include Bitcoin in his portfolio or recognize it as an inflation hedge. The report suggests that more companies may follow MicroStrategy's lead, seeing Bitcoin as a viable alternative to traditional investments. As inflation continues to affect conventional assets, Bitcoin's role as a store of value is likely to expand. Whether Bitcoin will continue to be viewed as a safe haven asset during periods of economic instability remains to be seen, but its growing popularity could significantly influence its price in the future. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.